Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hello and welcome to Business Line's State of the Economy podcast on real estate. This is your host, Abhishek Law, and we are here to discuss the sectoral macro trends with Mr. Sidharth Menda, the member supervisory board of RMZ Corporation. A quick two lines about the company. Founded in India and wholly owned by the Menda family, RMZ Corporation pioneers innovation through two pivotal pillars, the RMZ real estate and RMZ infrastructure. Hello, Mr. Menda, and welcome to Business Line podcast.
Yeah, Abhishek, thank you for having me. Happy to be here.
A quick question, sir. You are into a space which is witnessing a lot of boom post-COVID. So the obvious question comes is, how long do you expect this boom to continue? Is it sustainable? Especially when we in two categories, the housing space and let's say the commercial space.
So, Abhishek, great question. I think what is driving demand and driving this boom in each of the sectors is very different. I'll start with commercial. If you look at headlines globally for commercial office across the world, you actually find that headlines are quite negative. And, that's obviously a function of two or three tenets. The first is you hear of headlines about people working from home, as a result of which companies are giving up office space. The second is that thanks to rise in interest rates, you're seeing that valuations are depressed globally, which means that office buildings are not worth as much as they used to be, say, pre-COVID. And then you also hear of headlines where a few buildings are being bought at distressed prices. That's the global headline. But what's happening in India is actually very different. In the rest of the world, in the US, if you look at it as a market, you actually have tenants giving up office space because the work from home story is real. And that's because only about 25% of the workforce is back to work. In India, 75% of the workforce is actually back to work. And obviously that varies from industry to industry. Financial services is much, much higher than that number. And tech may be lower than number, and the average is about 75% of people back to work. So what's happening in India is that if you look at office space absorption, we're at about 60 to 65 million square feet this last year. And that's, if you compare to the last 6 years, 60 to 65 million is a 6-year high, right? So this is actually being driven by businesses, say American businesses or European businesses that are now setting up India GCCs. And these are new businesses entering India, and that's driving a lot of demand in India. And India has, if you look at India versus, say, China is the world's factory. India has obviously for the last 20 years been the world's back office. But now it's not just the large Fortune 500, Fortune 1000 companies that are setting up a base in India, but now you're seeing that there's a lot of newer businesses that have no India presence that are now looking at India to set up a GCC. So that is what's driving demand for office. If you look at the residential segment, it's a different story. You're actually seeing that, post-COVID, there is a lot of liquidity in India. There's a willingness to now spend to upgrade lifestyle. Obviously, this is being driven by a lot of liquidity coming from buoyant equities markets. And, that's creating a lot of new customers that weren't necessarily buying, say, luxury residential in the past. But what is interesting is if you look at the last 15 years in India, you've seen a lot of, say, for example, tech businesses. That cycle is now maturing, where you see a tech founder or founding teams that have gone through multiple liquidity events or exits. Their businesses either IPO'd or you see M&A activity. And now these founders or founding teams or CEOs have been able to take some money home. And they're now looking to deploy that into luxury residential. Right? So it's actually a coming of age where a lot of those businesses have now gone through that whole life cycle, and the beneficiaries of those businesses are now coming in and upgrading their homes. So that's actually driving a lot of demand. And if you look at the customer profile buying luxury residential, you see a lot of new names whose businesses you hadn't heard of 15 years ago.
Yeah, this was actually my next question. If I link this to the last part of your response on the luxury real estate, who are these buyers that you're talking of? So a part of it, which you obviously said, is new age tech founders, the new age tech companies. But again, the question rises: considering the global volatility in these sectors, are these sustainable? This ultra luxury or luxury space of above 4 crore, 5 crore properties sustainable in India right now?
India does about 300 to 350,000 units of residential across all segments. Luxury is obviously a small component of that. And on a population of 1.4 billion people, 350,000 units on residential across all sectors across the entire country is not actually much, right? So we have a lot of headroom for growth. But if you look at the luxury residential segment, there is, like I said, tech is just one example, but look at what India has gone through in the last 15 years. You've seen the manufacturing sector becoming far more organized. You've seen, a lot of businesses that you hadn't heard of 10, 15 years ago that have now seen that you've seen IPOs, you've seen a lot of M&A activity across different sectors. And like I said, it's those founders, the CXOs across those businesses that are now coming and buying luxury residential. And the ticket size for luxury residential in India is typically across most cities is anything north of about 5 crores a unit. So it's not that those markets are extremely deep. It varies from city to city. Above 5 crores, maybe a city like NCR would do about 1,500 units. Mumbai is probably about 1,000 units. I'm doing average across the last couple of years. Bangalore's maybe about 500 units. But there is demand. It's also a segment where the supply is able to keep pace with demand. And another way to measure this metric is if you look at inventory overhang in residential, because demand is now at about 300, 350,000 units, you're seeing that inventory overhang, which is one way to measure oversupply in the residential segment, is down to about under 2 years in a city like Mumbai, where about 6-7 years ago, the inventory overhang was about 8-9 years. So the oversupply that you would see historically in residential, that has come down dramatically. You had oversupply in the past that's been absorbed by the market, and now the new demand is also, the new supply is keeping pace with demand.
Right. And so again, I'll take one more step back and go back to the commercial space. What is this factor that is driving investments in India? Because globally there are concerns, as you rightly pointed out.
Absolutely.
Economies are not doing well. There are inflationary pressures, overhang of geopolitical issues. But what is the factor that is different in India which has made them come into this? So I want the response primarily from two sides. One is, are we building those grade A office spaces that they generally look at? And the number two is there a cost factor that is playing out for these GCCs to come and invest in India?
I'll take the latter first. It's absolutely a cost arbitrage. That's the entire India story. Look, 1.4 billion people, English-speaking workforce. That has been and cost arbitrage. That's been the historic driver for outsourcing for India, and that continues to be the case. There's no other country that offers you the ability to come. You set up shop, you get a significant cost arbitrage. You have a workforce that's ready to go, and you're able to, essentially take a function of a business that's based in Europe or based in US, based wherever, and outsource that entire function and move it to India at a fraction of the cost.
Right.
Okay. And it's also, we're uniquely positioned. India is, from a time zone perspective, you have the ability to work with Asian markets that work ahead of India, and you're also able to work with Europe and also able to work with North America. So, financial services obviously gets that benefit as well. Coming back to your previous question on product.
Yeah, on the product, yes.
This is a very interesting one. When we've spoken to most of our customers, and this is something that today any of the large Fortune 500 companies that operate in India will validate, is that the quality of office space that they're able to access in India is the same as what they would get in Manhattan or San Francisco or London. And it's the same. The RFP documents or the expectations is that I would have the same office in India that I have in Hong Kong or London or wherever. And today the Indian real estate developer is able to deliver that.
Okay.
right? So there's no, it's not that you're coming to India and getting a compromised experience. In some cases, actually, they're saying, I have something unique in India and the quality of office space you're getting access to in the social infrastructure around it that I may not necessarily get in a place like San Francisco.
Perfect. Right. So the next question again is on commercial space. So if we take what in future, what would be driving the commercial space now? Will this continue to be GCCs, financial services? Is this the sector that's continuing to will continue to drive commercial spaces in India?
Yeah, GCCs roughly contribute to about a third of office space absorption today. That will continue to be a driving force for the sector. It's obviously, in India, there's other trends that help as well. You're seeing that urbanization continues to be on the rise, which means employable workforce in any city is constantly growing. India is obviously India is the youngest country globally in terms of workforce. And I think the average age of a population is 28 compared to, if you look at the US, it's over a decade older than India. So that again is it. If you look at it from the perspective of any large Fortune 500, Fortune 1000 company coming to India, they're saying, hey, now I have the ability to employ workforce at all segments. The amount of candidates I have for any position is much, much larger than I have anywhere else in the world. I think that this is a trend that you're going to continue to see for the next decade at least.
And on the product side, would Indian developers now look to integrate more environmental friendly offerings? I mean, typically the question has been Indian developers have always compromised on environment. But do you see that changing now with these LED standards coming in, or lead standards coming in, or other such concerns coming in?
I would dispute that. Actually, I think Indian developers have always been very ESG conscious. For us at RMZ, we had India's largest well-rated portfolio, but not just us. It's if you look at any of our peers in the industry, every single one of us will have a LEED Gold or LEED Platinum rating, and we've been doing this for the last 2 decades. So again, in terms of ESG ratings, India is comparable to, in terms of ESG, to any of the assets you see anywhere else in the world. It's the same rating agency that's operating in India, that's operating globally, and we're holding ourselves to the same standards as any real estate developer globally.
Okay, perfect. Again, I'm just taking this discussion a little beyond these two product portfolios now, commercial and beyond these two, commercial and residential. We also have, if I may put the word, alternate classes are coming up. Let's say these, and when I say alternate classes, I'm referring to industrials, warehousing, logistics segments. What is your outlook on that? We have been seeing warehousing growth thanks to e-commerce primarily, and also change in buying patterns. So where do we India and overall the trend stand there?
So India is an interesting cusp because, as you rightly said, warehousing is driven by e-commerce demand. E-commerce consumption in terms of penetration in India is again around the 10% mark. Compared to, if you look at a country like the UK, it's at about 65% is e-commerce penetration. So headroom for growth on the warehousing side is large. But what's particularly interesting is industrial. Because industrial is, you'd essentially have OEMs, and take an example like a large automotive manufacturing plant located on the periphery of any Indian city, right? There's a lot of OEMs that work with the automotive companies, the car manufacturers basically. And these OEMs have demand for industrial space. The OEMs aren't necessarily the ones that are going to come acquire land, invest capex into building out their own buildings. They need a real estate provider to come and give them a solution in close proximity to their customer, which is the large automotive manufacturer, right? And if you look at this example, the amount of businesses that are now looking at an alternative to China, the China plus one strategy, as it's loosely called, that are saying that, hey, India and Vietnam are the two great alternatives to China, and India has large population. You also have a tremendous benefit of domestic captive consumption that you're able to take advantage of. So India is proving to now be a great alternative to China. You're still scratching the surface in terms of moving manufacturing away from China. We have a long way to go. But even if we get to about 5% of China, it's tremendous growth compared to what we already have in India today, and that's driving a lot of demand on the industrial side. We're seeing it on if you look at the iPhone value chain for Apple, you're seeing how much of it has already moved to India. It's still at about 7-8%, but there's a lot of upside there as well.
And beyond this industrial and warehousing, there's also another sector, data centers, that had once seen,
Right.
that had been in discussion for quite some. What is the ground realities on that? Do you see that being as lucrative as it was once pitched to be, especially for states like North Indian states, which are landlocked states, which were trying to push data center businesses?
So I'll tell you where data centers are today, and I'll just give you what I believe is my personal outlook for the future on data centers in India and globally. Today, data centers are concentrated in about 50% of demand is concentrated in Mumbai, and about 25% of demand is concentrated in Chennai. And the reason for this is the way data centers work is that it has to be located to where the subsea cables terminate, where the landing stations are. Okay, now obviously subsea cables have to terminate somewhere on India's coastline, but it's made sense for the subsea cables to obviously have an added advantage of being close to a consumption hub. So Mumbai and Chennai have, for multiple reasons, in addition to the reasons I just said, proven to be a great landing station for the subsea cables as well as consumption hubs. So data centers have to be located in close proximity to these landing stations. So, which is why Mumbai has seen 50% of demand, Chennai has seen about 25% of demand, and then the remaining 25% is spread out across all the remaining tier 1 and tier 2 cities. That's the landscape today. Okay, obviously other tier 1 cities, NCR, Bangalore, Hyderabad, Pune, Kolkata, they have demand as well, but that's all total is included in that last 25%. Data centers it's a long gestation business. 50% of demand comes today from the large public cloud providers, and that's Amazon Web Services, Microsoft Azure, and Google Next. These are the three large public cloud providers. If you think about where your HBL website is hosted, I'm sure it's hosted. You maybe have your own servers, but part of it may be hosted on one of AWS or equivalent. Right. So that's what 50% of India's demand. The remaining 50% comes from either wholesale or retail customers. Now, when you think about the customer profile, you think about anything that you're doing on your smartphone. It could be banking, it could be you're browsing a website, watching OTT, watching sports on something. All of this is on the remaining 50%, and that goes into different wholesale or retail. And for most of these customers, they need a network that is distributed across India because you need to reduce latency to be close to your customers. Right. So the first phase of the build out is to build landing stations. What we'll start to see going forward is you'll start to see a lot of demand on the periphery of cities. And what will help drive that demand is that now with the advent of AI, you're going to see that only part of the AI functions we use are actually processed on device on our smartphones or on our laptop or other device. A lot of AIs are going to be processed on cloud. If you look at, you're using something like ChatGPT, a lot of it is processed off device and is processed on cloud, and you need AI compute power that's on the periphery of cities that is easily accessible at low latency to consumers. So there's a lot of demand that is going to be created, and you need data center capacity to be able to fulfill that demand. And what's also helped is the fact that from a regulatory standpoint, our government has decided that now all data needs to be stored in India. And that's suddenly it's created a new avenue for data storage within our country as well. So it's a long gestation business. It's a high capex business, but there is a lot of demand. And today, there are a lot of high quality operators within the data center business that exist across the country that are servicing these demands in different formats.
My final question would be on the hospitality sector. I mean, post-COVID, sure, we do have seen a boom in people traveling, Indians traveling, whether it's abroad or whether it's within the country. In some cases, they're taking more than one vacations. 2-3 vacations seem to be quite normal now. So where does the hospitality sector stand now? How fast can hotels come up, or how do these hotel chains see the Indian diaspora now? That is one part of the question. And the second part is considering an increase in real estate costs, which is quite real. Do you see the
Sure.
average hotel acquisition costs go up vis-a-vis the tariffs?
Abhishek, it's a great question. And the first part of the question is what is driving demand for hospitality and how does this play out over the next few years? Today, average room rates in India, if you compare it to in the last 4 years, even post-COVID, 2021 to 2024, room rates have doubled. Okay, which, if you're in the hospitality business, it's what you dream of happening one day, and that's actually played out today if you're a hotel owner. Occupancy rates, on average, if you're building a hotel, if you're at about a 65-70% occupancy, you're good, because that's what you're projecting is the base case. Today, average occupancies are crossing 80% in most of the 4 or 5-star hotels in India. So it's driven not just by leisure travel, by vacations, but it's obviously driven within the large tier 1 cities by a lot of business travel as well. And this is a sector that is going to, according to us, continue to grow. But where room rates play out, it is a cyclical business and it's also a seasonal business. And the occupancy and room rates I spoke of, I think the seasonality is built into that. But the longer cyclical curve, we have to see how that plays out. But in the long term, it's still proven. If you look at current room rates and even take a discount on it of 15-20%, it still is looking like a much more lucrative business today than it did pre-COVID. And I think that's driven by structural shifts in consumption. You're seeing today that business travel, because of a new way of people working, business travel has now become a need of the hour. People are forced to travel more for business. It's also, there's a lot of things, I think, immediately post-COVID, you believe that we could get done on Zoom, but there's some part of business that has to be done in person. And there's a willingness of people to say, okay, now look, I don't mind taking the flight, let's get it done. So there is this structural shift in now what is driving business travel. You're seeing a lot more conferences. You're seeing a lot more the need for convention centers in India. And same with leisure travel. Again, structural shift in people's willingness to spend on leisure travel. Right. And I think that is not going to go away. Will room rates maybe subside a little bit? Possibly. But even if it does taper off a little bit, like I said, if you take a 15 to 20% discount in the long term compared to where rates are today, I think it's still seeming like a very lucrative proposition. And also, if you look at demand versus supply, today at each segment, if you look at tier 1 cities in India, whether it's the tier 1 business cities or even the great tier 1 vacation destinations, it is still fairly underserved in terms of number of rooms available versus demand for those rooms, which is today what is driving room rates up so high.
Okay.
So in the long term, it does seem like a quite lucrative business. Another thing is if you ask any hotel owner what is their expected stabilized gross operating profit margin or GOP margin, today they're already crossing that number by the tune of 30 to 50%.
Okay.
So today is looking extremely lucrative, but long term, how the cycle plays out remains to be seen.
Right. And overall, is increased real estate cost playing out something to do with average room rates?
Across the board, because real estate as an asset class is doing well, is driving real estate. The underlying land cost up for all of us is driving construction costs up. But when revenue goes up, then it puts upward pressure on your costs. And if you suddenly start to see a lot of pressure on revenue, obviously that plays out in land costs. It may not play out in construction costs because the underlying cost of raw material is what it is. But at least on land costs right now, it is going up, but it is being compensated with higher revenue.
Okay. Perfect, sir. That was all from my end as of now. As usual, it was lovely talking to you, sir. And once again, thanks for being on the podcast, sir. Pleasure hosting.
Absolutely.
It was a pleasure hosting.
Thank you, Abhishek.
Thank you.
For the
Thank
time.
you, sir.
Thank you.